Good morning. Hello, hello, hello. Happy Friday. Always love being here with you two. I'm backstage and I'm just like cheering for all of these amazing women and the accomplishments and the promotions and how smart these companies are being about the talent that they're promoting and bringing in. So it's so exciting to be a woman in this space and to really see the focus on women in leadership in mortgage specifically and everything that Athena's Council does with those women as well. So I love it. I love seeing everything about it. Okay, so market intelligence. A couple of weeks ago, we chatted about M&A is kind of the thing to be watching, right? There's been a number of different ones that we've seen. Well, another one popped up this week. Envoy is acquiring Mason McDuffie's distributed retail. So that's about 100 loan officers who have generated in the last 12 months $1 billion in originations. So this isn't any small little potato quiet acquisition. That's a pretty big win for Envoy and the model that they've been putting together over there. So congratulations to Envoy. My hope is that it is a great transition for all of those LOs that are being acquired. Sometimes that can be a little rocky when you're coming under a new umbrella, but Envoy is a great is a great mortgage provider in this space. So I have every confidence that they're going to make this transition as easy as they possibly can. But today, for market intelligence, we're going to talk about Fannie Mae's AI governance mandate. August 6th is not the finish line, it was just the starting gun, right? Um, and really, here's the thing that I'm going to ask the audience. If Fannie Mae showed up at your door today as a lender and asked you to list every AI tool that your company was using, who built it, and what safeguards you have in place, could you give them an answer in under 10 minutes? If that answer is no, you probably have a problem because as of August 6th, just yesterday, that problem has a compliance deadline attached to it. So, what actually happened? Fannie Mae issued their lender letter. It was LL 2026-04, which became effective yesterday. And it is the first sector specific AI governance mandate that has ever been issued to mortgage lenders. That's important. Every approved Fannie Mae seller servicer is now required to have a formal AI ML government or governance framework in place. Side note, all of you AI compliance consultings, if I were you, I would add AI mock audits to your list of things you do to help these lenders get in or at least advance potential audits that could be coming, and they will be coming. So the letter was published on April 26, giving lenders 120 days to comply. Not a very long lane for most lenders, right? We're as lenders traditionally with some of the other mandates that have been sent out, we're used to having 6 months, a year to kind of get our crap in order. Not happening here, folks. 120 days. It applies to any use of AI or machine learning in origination or servicing. So this is not just about underwriting tools, right? This is about Claude. This is about Chat GPT. This may be about a deployment of a specific business use case of a tool that you have used for. Freddie Mac issued parallel guidance at the same time. That's in section 1302.8. Hear me. This is not a suggestion. It is a contractual requirement that is tied to your lender contract with Fannie Mae now. So this is an industry reality check. Scotsman Guide reported this week that a significant portion of the industry showed up to the deadline unprepared. Brian View, who I follow and love, president of MISMO, he said publicly there's really no excuse for any lender to not be prepared with a documented policy and procedure and at a minimum, a baseline inventory of its own AI use case, right? It's throwing down the glove. Lenders, show up, know what's happening within your organizations, and be prepared with document to be able to support that. So, one of the things that I really want to, share out as a point is most lenders think that AI governance means writing a policy document. Fannie Mae's standard is much harder than that, right? So the the AI LL mandate that got put out actually requires that you document the AI ML inventory. You must know every tool as it comes across origination and servicing, who built it and what it touches. You must have written policies and procedures that cover development, implementation, use, ongoing maintenance of every AI system. A named owner for each AI system who reviews and updates that policy at least annually. Fair lending and bias safeguards. Those AI tools must be tested for discriminatory outcomes, not just accuracy. So this is not just, hey, do you have it? Fannie Mae is asking, you have it, you identify it. It is also needing to be tested to ensure that there's not discriminatory outcomes, right? That is a whole nother level of AI deployment within lenders. Vendor and subcontractor governance. If your LOS, pricing engine, CRM uses AI under the hood, you are responsible for that compliance too. That is the one that the most of the lenders are missing. They're like, hey, I've bought this tool, that I've connected. It's not my tool, so I don't have to ensure its compliance. Those Fannie Mae says, nope, you absolutely do. Information security compliance, it's tied to Fannie Mae's existing business resilience supplement and live audit readiness. Upon inquiry from Fannie Mae, you must be able to quickly disclose the types of tools in use, providers, and the safeguards in place, right? And as Brian said, there really shouldn't be any reason that a lender cannot do that in 5 minutes or less, right? Policy document and a spreadsheet will not pass this test. You need operational evidence. So, why is this bigger than compliance? The lenders who are treating this just as a checkbox exercise, you're going to lose, folks. The ones who treat it as an operational advantage, you're going to win. Every lender is already using AI, whether they know it or not. Automated income verification, fraud detection engines, AVM tools, chatbots, pricing algorithms. The question was never, are we using AI? It was always, do we know what we're using and can we defend it? And I'm going to tell you, I think this is a preview coming from CFPB and state regulators. Fannie Mae made the first move in the mortgage space, but it is not going to be the last. So, governance framework built now is going to be reusable to those other mandates as they arrive. And then, listen, the fair lending exposure, I think, is real here. If an AI tool in your stock makes or influences a credit decision and it has a disparate impact on protected class, your governance framework is the only thing that is going to stand between you and an enforcement action. We didn't know the vendor's model did that, is not going to be your defense. So, what mortgage lenders should do right now? Build your AI inventory first. Walk every department and ask, what tools do you use that involve automation, prediction, machine learning? You cannot govern what you have not mapped. Call your top 3 vendors today. Ask them directly. Do you use an AI product? Can you provide documentation of your AI governance framework? If they cannot answer quickly, that's a red flag, lenders. Assign an owner. Compliance does not happen by committee, folks. One person needs to own the AI governance policy and needs to be accountable for it annually. Maybe that's in technology, maybe that's in compliance, maybe that's in legal. You're going to have to decide, as a lender where it sits, but one owner needs to have it. Stop treating fair lending as a separate conversation. AI bias review and fair lending compliance are the same conversation now. right? Your compliance team and your technology team need to be in the same room, and then document everything in real time. The audit standard is operational evidence, not your intention. If you tested a tool for bias, write it down. If you reviewed a vendor's policy, save the email, build the paper trail as you go. So the mortgage industry has spent 20 years being told AI was the future. Fannie Mae just told us the future has a deadline. The lenders who built the government's frameworks this summer are not just compliant. They are operationally ahead of every competitor who is still trying to figure out what tools they're even using. So, some quick stats. Deadline August 6th. That was yesterday. It's already passed. Your governing document for this is Fannie Mae Lender LL 2026 04. You have a parallel rule that has come out from Freddie Mac in the Seller Servicer Guide section 1302.8. There's some industry sourcing that you can go check out that was published by Scotsman Guide and National Mortgage Professional. And then, interestingly enough, there's a global context. Australia's APRA issued a parallel warning to all financial institutions on April 30th, 2026, citing the same gap between AI adoption speed and governance readiness. So, this isn't just a mortgage industry US thing that's happening. We're seeing this happen from a global perspective. So, that's all the good stuff I have for market intelligence today. It's a lot. It is like a haunted house. Like you don't know what door you're going to open and like, what's behind it, right? Especially with the vendors. That's the part that's starting to kind of really give me some pause with lenders is like, I want to believe that they know what they're using as tools and could defend it, but I don't think a lot of these lenders know what other vendors that they're using that the AI is running on those tools, right? Pricing engines, LOSs. It's a lot. It's a lot. Oh, yeah, we might want to put out an Athena's council of like, consultants that are going to be, specialized operational readiness for this, because I absolutely would recommend lenders to, once they think that they are operational readiness, like take that through a mock audit and be sure that you're ready for it, right? Nothing could be worse that Fannie Mae goes to a seller servicer at that 120-day deadline and the lender can't produce. How does that impact you as a seller servicer? Do you get put on pause? Maybe there's financial impacts. Like I think all of those things could come and play. Yes, Laura, lenders are way behind and it's scary. And I know because I know you, you are absolutely focused on some of this compliance from an operational readiness, especially with AI. Another member, Brooke Tompkins, Suha, all of them talk about, AI, and all of them have been very astute in making sure that it's not just about, AI and use like as a solution, but how can it potentially impact your organization as a lender? Yeah, Jen, vendor management, absolutely key. I'm gonna tell you, if I still had my consulting business, it'd be the number one thing I'd be offering out right now. Yeah, yeah, absolutely, absolutely. That's what market intel is all about: is finding some, nuances and where it's going to be impacting our industry. And I don't think that anybody could dispute that AI has the capacity of creating fantastic operational efficiencies in mortgage, but it also has the capacity of tripping up some lenders. So we got to be watchful for it. So Audra, I love that idea, but here's the thing, and the perspective I have. There are so many small, nuanced AI companies launching tools and things and deploying them that and so quickly. I don't know that they've thought about that, right? It's speed to market. Let me get this idea out there. Let me create a solution, that I can gain some revenue on. And I'm not faulting them for that. I'm just saying if you're going to connect that tool into a financial or into a mortgage lender, you should be prepared in partnership with your lender to defend your product. Mm, I know one. I got a guy. You guys know well, guy, gal. I got someone in my back pocket for most things, and I do have a company that I would lay the testimony to about that groundwork. I'll reach out and ask them. Happy weekend.